Something shifted lately. For decades, the default cultural posture was simple. Experts know. The public listens. Doctors, lawyers, scientists, economists, journalists, they were the authority layer of society. Today, suspicion is mainstream, and it's not limited to the fringe communities anymore. It's everywhere. So what happened? Today, I'm going to examine 11 structural factors that contributed to the decline of trust in experts and consequently to the rise of fringe theories. Factor number 1. Overexposure of institutional failure. Experts were once protected by distance. Most people never directly checked expert predictions, expert debates, or expert failures. Information moved slowly. Institutions controlled visibility. An authority itself created credibility. A scientist appearing on television, a doctor quoted in newspapers, an article in a popular magazine by an economist from a prestigious university. These figures were filtered through layers of institutional prestige before reaching the public. People mostly saw the polished final version, the title, the position, the authority, not the uncertainty, disagreement, failed predictions, political pressures, or internal conflicts behind the scenes. But the internet changed that. Suddenly, expert statements became archived, searchable, and directly comparable over time. People could now watch economists failing to predict crisis, scientists contradicting previous claims, official recommendations reversing within months, political analysts being repeatedly wrong. And once the contradictions become visible at scale, prestige alone stops being enough. Because people no longer see only authority. They also see error, uncertainty, and inconsistency. And once institutional certainty visibly fractures, people naturally begin searching elsewhere for explanations. And once institutional certainty visibly fractures, people naturally begin searching elsewhere for explanations. Not necessarily because fringe theories suddenly became stronger, but because institutional credibility became weaker. When official authority loses its aura of infallibility, alternative frameworks automatically gain psychological space. Factor number 2. Commercialization of expertise. Capitalist systems structurally generate conflicts of interest between providers and consumers. Experts are supposed to serve truth, but most operate inside revenue systems. Let's break down two of the most traditional areas of expertise: medicine and law. Medicine. Doctors are bound by professional ethics. In theory, their priority is simple: the well-being of the patient. But in practice, most doctors operate inside large economic systems that shape behavior whether they want it or not. Insurance, billing systems. In many countries, especially highly bureaucratized healthcare systems, treatment is deeply tied to insurance structures. Doctors and hospitals often cannot simply prescribe what they personally consider optimal. They must work within what insurance companies approve, reimburse, or classify under specific billing codes. Administrative and financial logic partially enters medical decision-making. From the patient's perspective, this creates the feeling that treatment is being negotiated with the system, not purely determined by medical judgment. Procedure-based compensation. Another structural issue is compensation itself. In many healthcare models, procedures generate more revenue than prevention or minimal intervention. Surgeries, tests, follow-ups, scans, prescriptions, these are measurable, billable activities. Meanwhile, spending an hour discussing lifestyle changes or recommending restraint may generate far less financial return. This doesn't mean all doctors intentionally exploit patients, but the system naturally rewards activity, throughput, and intervention. And once people notice that, suspicion increases. Pharmaceutical influence. Then there is the pharmaceutical layer. Drug companies fund enormous amounts of medical research, advertising, conferences, educational programs, and clinical trials. Again, this does not automatically invalidate all medicine or all pharmaceuticals, but it creates the perception that medicine is not fully separated from corporate financial interests, especially when the same industries profiting from treatments also help shape the informational environment around those treatments. Corporate hospital targets. Finally, many doctors today work not as independent practitioners, but inside large corporate healthcare systems. Those systems track metrics, patient throughput, efficiency targets, revenue goals, liability management. Over time, medicine starts feeling increasingly industrialized. Patients feel processed rather than personally cared for, and doctors themselves often report burnout from administrative pressure and productivity demands. So from the outside, the public begins perceiving a tension between medical ethics and systemic financial incentives. Even when individual doctors are sincere and highly competent. Law. Same structure, different mechanics. Law operates under a similar structural tension. Lawyers are bound by professional ethics, loyalty to the client, confidentiality, and acting in the client's best interest. But the legal system is also a business environment, and its economic incentives do not always align perfectly with the client's interests. Billable hours. One of the clearest examples is the billable hour model. In many firms, especially corporate firms, time itself becomes the product. More meetings, more filings, more research, more procedural work, more hours billed. This creates an uncomfortable structural reality. Efficiency can reduce revenue. The faster a problem disappears, the faster billing stops. Retainers and prolonged engagement. Then there are retainers and long-term engagements. Many legal relationships become financially valuable precisely because they continue over time. A rapidly solved issue may be ideal for the client, but extended dependency is often economically better for the firm. Again, this does not mean all lawyers consciously exploit clients. But the incentive structure itself creates friction. Litigation as an economic engine. Modern litigation systems are extraordinarily procedural and complex. Discovery phases, motions, filings, expert consultations, procedural disputes. Cases can expand into massive technical operations, and complexity itself generates billable activity. This creates another tension: the simplest path to resolution versus the path that maximizes procedural engagement. So, a case that could settle early may continue through additional stages. Discovery may expand far beyond what the client expected. Clients may be encouraged to continue fighting when settlement could be economically rational. Not necessarily because the lawyer is malicious, but because the structure rewards continuation. Knowledge asymmetry. And there is another issue. Most clients cannot independently evaluate legal necessity. Law is highly specialized, procedural, and technical. So the client often has no practical way to determine which actions are essential, which are strategic, and which may simply increase billable complexity. That asymmetry becomes psychologically important because once people feel incapable of verifying what professionals are doing on their behalf, trust becomes fragile. Accessibility crisis. In some sectors, individuals even struggle to find strong legal representation against major corporations because many experienced firms already maintain ongoing contractual relationships with those same corporate networks. This usually occurs in areas such as labor disputes against large employers, medical malpractice cases against hospital systems, environmental litigation, banking disputes, or conflicts involving major technology and communications companies. Even without explicit wrongdoing, the concentration of legal expertise around large institutional clients creates the public perception that access to high-level legal defense is structurally unequal. Result. Is this universal? Of course not. There are highly ethical and genuinely client-focused lawyers. But structurally, the public perceives a conflict between justice and the economics of legal practice. When that perception spreads, trust erodes. Across different areas of expertise, the deeper the gap between ethics and incentives becomes, the harder it becomes for institutions to maintain automatic legitimacy. When legitimacy weakens, alternative narratives no longer remain marginal. They become culturally competitive. Factor number 3, corporate incentive structures. Point number 1, shareholders versus consumers. Now zoom out from individual professions to corporations themselves. In late-stage capitalism, more and more industries have been consolidated through mergers and acquisitions into enormous corporate structures, aka monopolies. Remarkably close to what Karl Marx predicted over a century ago. Over time, many supposedly competing entities end up connected through the same investment and financial networks. And when that happens, competition increasingly starts looking theatrical rather than real. Over the past few decades, many companies gradually shifted their primary focus from serving customers to maximizing shareholder value. Public corporations are now structurally incentivized to prioritize metrics like quarterly earnings, stock price performance, and margin expansion. And once those metrics dominate decision-making, certain patterns naturally emerge. Quarterly earnings. Public companies are under constant pressure to demonstrate growth every few months. Not every few years, every quarter. That creates short-term optimization pressure. Cut costs now, increase revenue now, show immediate performance now. Long-term durability, craftsmanship, or customer trust become secondary to immediate financial reporting cycles. Stock price performance. Then comes stock price pressure. Executives are often evaluated and compensated based heavily on market performance. This means decisions increasingly optimize for investor perception, announcements, growth optics, market confidence, expansion narratives, even when those decisions do not improve the actual consumer experience long-term. Margin expansion. Corporations constantly seek higher margins. In practice, this means doing more with less, reducing labor costs, outsourcing production, using cheaper materials, automating customer support. Again, not necessarily because every executive is malicious, but because the system rewards efficiency and extraction. Once those incentives dominate, predictable consequences begin appearing across industries. Cost-cutting over quality products become cheaper to manufacture. Support staff shrink. Quality control weakens. Durability declines. Consumers increasingly feel they are paying more for products and services that last less. Planned obsolescence. In some industries, products appear designed not for maximum lifespan, but for replacement cycles. Devices become difficult to repair. Software support ends quickly. Parts are intentionally non-modular. From the consumer perspective, this creates the feeling that products are engineered for recurring consumption rather than durability. Service degradation. People increasingly notice declining customer service quality. Longer wait times, automated systems replacing humans, fragmented support departments. Companies optimize operational efficiency, but customers experience it as depersonalization. Aggressive upselling. Many businesses now continuously push subscriptions, upgrades, add-ons, warranties, premium tiers, and bundled services. Interactions increasingly feel monetized at every stage. Simple purchases become funnels for additional extraction. Data monetization. And finally, many modern digital businesses discover that user behavior itself becomes a valuable asset. Attention, browsing patterns, preferences, location, data, engagement habits all became monetizable. As a result, platforms often optimize not for user well-being, but for engagement, retention, and behavioral predictability. From the public perspective, this creates another psychological shift. People no longer feel treated primarily as customers. They increasingly feel treated as data sources. And over time, that perception deeply erodes trust. Point number 2. Private equity consolidation. This shift intensified with private equity expansion over the last couple of decades. Across many sectors, a large portion of small businesses were acquired and consolidated. Dental practices, veterinary clinics, local repair shops, medical service providers. The following pattern emerged: acquire fragmented small businesses, standardize operations, increase pricing and throughput, reduce costs and maximize financial returns before resale or investor payout. This naturally led to several consequences. Professionals lose autonomy. Decisions shift from practitioner judgment to financial targets. Customer relationships become transactional. Local trust networks dissolve. A veterinarian is no longer just a vet. They operate inside a portfolio strategy. A dentist is no longer just a clinician. They are evaluated on production metrics. Even if the individual professional is ethical, the system they operate in is not neutral. This pattern is not limited to medicine or law. Across many professional fields, expertise becomes entangled with financial incentives. Financial advisors often depend on commissions and product sales. Academics increasingly depend on grants, institutional funding, and publication pressure. Media experts operate inside the attention economy, where visibility, engagement, and controversy generate reach and revenue. Consultants frequently benefit from prolonged contracts and ongoing dependency. This does not automatically invalidate their expertise, but when people begin noticing how strongly advice is connected to incentives, neutrality feels less obvious. Expertise looks financially entangled. People begin asking, who benefits from this advice? That question becomes the psychological gateway through which many modern fringe theories spread. Because once institutional neutrality is doubted, hidden contradiction starts feeling more plausible to the public. Factor number 4. Credential inflation and gatekeeping. Unlike a century ago, when expertise was built through apprenticeship, direct practice, and reputation, becoming an expert today is increasingly tied to formal institutional credentials, degrees, certifications, licenses, continuous renewals. But here's the fracture. A growing number of graduates cannot find work in the fields they studied. It's a mass pattern across multiple sectors. An oversupply of degrees relative to actual market demand. A growing mismatch between academic training and real-world professional needs. Another issue. Many entry-level roles now require prior experience that degrees themselves do not provide. People invest years and capitals into credentials which do not translate into corresponding roles. Chronic underemployment generates resentment towards the very institutions that issued those credentials in the first place. At the same time, qualification requirements continue inflating, with more and more jobs demanding formal degrees that were not previously necessary for those roles. Those who do enter their field often face corporate limitations, liability restrictions, standardized protocols overriding judgment. Specialists discover that they are able to apply only a tiny fraction of what they spend years learning and mastering. From the inside, this creates mass burnouts. From the outside, two things become obvious simultaneously. Many experts cannot practice what they trained for, while those who do are significantly constrained by systems. This creates a damaging perception. If a degree does not reliably lead to competence-based placement, what exactly does it certify? It begins to look less like a signal of expertise and more like a filtering mechanism or a financial product. And when institutional titles stop guaranteeing visible competence, people become more and more willing to search for opinions outside conventional expertise. Outsider voices get more legitimacy. That does not automatically make all fringe interpretations correct, but it does weaken the old monopoly on credibility. Factor number 5. Meritocracy erosion. Another fracture point. The belief that the most capable rise to the top. In the corporate world, people observe something else. Promotions influenced by politics, not performance. Hiring driven by networks, not competence. Bureaucracies favoring conformity over excellence. Risk-averse systems sidelining high-variance talent. The result is predictable. Positions of authority are often perceived as occupied by mediocre but system-compatible individuals, not necessarily the most skilled ones. This matters because trust in expertise depends on one assumption: the person advising you is among the most competent available. If that assumption collapses, the entire authority structure weakens. People start to treat expert opinion as one among many, not the best one. Once authority is no longer associated with exceptional competence, fringe thinkers stop appearing automatically inferior. To many people, they begin looking like alternative competitors in the same marketplace of ideas. Factor number 6. Scientific crisis. Another major fracture point is the growing realization that science itself is not as mechanically reliable as the public is taught to believe. For decades, science was culturally presented almost as a machine for producing objective truth. But more often now, people discover structural problems inside the scientific system itself. Studies failing replication. Research shaped by funding incentives. Publication bias toward dramatic results. Career pressure to publish constantly. Journals preferring novelty over verification. Peer review is also frequently criticized for conflicting incentives, where professional peers may have reasons to protect existing paradigms or limit competition rather than promote radically new findings. And then came another uncomfortable realization. Much of the public does not actually read science. They consume interpretations of science, filtered through media, institutions, corporations, and political narratives. So when scientific conclusions suddenly change, reverse, or collapse under replication attempts, people perceive not healthy correction, but institutional instability. Authority versus process. An important issue is that science and scientific institutions are not exactly the same thing. Science itself functions best as a process of continuous questioning, testing, revision, and correction. In other words, science is supposed to evolve. Hypotheses change, models improve. Old theories get modified or abandoned when better evidence appears. That flexibility is actually one of science's greatest strengths. But there is a problem. Large institutions, governments, media systems, universities, corporations often communicate science very differently to the public. Instead of presenting science as an evolving process with uncertainty and internal debate, they often present conclusions as stable, finalized authority. To many observers, modern scientific institutions appear reluctant to openly admit mistakes, uncertainty, or failed predictions. And this creates a psychological mismatch. Because when the public is first told this is settled and later sees recommendations change, studies fail replication, or expert opinions reverse, people do not experience that as normal scientific correction. They experience it as contradiction, incompetence, or even deception, especially when the original uncertainty was never openly communicated in the first place. So, paradoxically, attempts to make science appear absolutely certain can end up damaging trust in science itself. When uncertainty is hidden, every correction feels like a cover-up instead of a refinement. Science as institutional orthodoxy. Another shift is cultural. More and more people no longer perceive science purely as an open-ended process of inquiry. They perceive modern institutional science as developing some of the same social characteristics historically associated with religion, because large institutions around science function through consensus enforcement, credentiated priesthoods, accepted orthodoxies, taboo topics, reputational punishment for dissent. To many observers, this begins to resemble less a decentralized research for truth and more a damaged system of authorized belief. Historically, science gained trust precisely because it challenged dogma. But when scientific institutions themselves begin appearing dogmatic, the psychological role reverses, especially when phrases like "trust the experts" or "trust the science" start sounding less like invitations to investigate and more like demands for deference. Of course, science as a method remains one of humanity's most powerful tools for investigating reality. But public distrust merely targets not the method itself, but the institutions, gatekeeping structures, and authority systems built around it. And for many people, those structures now feel less like open inquiry and more like orthodoxy management. Technological disillusionment. There is also another, more cultural layer to this growing disillusionment. For much of the 20th century, science was associated not only with truth, but with civilizational optimism. Popular culture imagined rapid technological transcendence, flying cars, permanent moon bases, Mars colonization, warp drive starships, radical life extension, and post-scarcity technological futures. But for a growing number of people, the reality of the early 21st century feels psychologically narrower and economically more constrained than those expectations. Instead of dramatic civilizational breakthroughs, much technological development appears concentrated around advertising systems, behavioral tracking, financial optimization, digital entertainment, and attention extraction. Whether fair or not, this creates another subtle psychological shift. Some people begin feeling that institutional science no longer looks like a force pushing humanity toward extraordinary futures, but more like a system focused on management, optimization, and incremental control. Funding and incentive layer. Then people notice another structural issue. Research requires funding, and funding is not neutral. Governments, corporations, universities, pharmaceutical companies, defense sectors all influence which questions receive resources and visibility. This does not automatically invalidate research, but it weakens the image of science as completely detached from institutional interests. Result. So over time, many people stopped seeing science as a pure truth-generating mechanism and started seeing it as a human system with politics, incentives, prestige hierarchies, and economic pressures. Once science becomes perceived institutional rather than transcendent, skepticism naturally increases, and this may be the deepest fracture point of all. Because once institutions associated with objective truth lose unquestioned legitimacy, fringe interpretations no longer feel automatically irrational. They begin feeling, to many people, like parallel attempts to explain reality outside institutional control. Factor number 7. Technological decentralization of knowledge. For centuries, expertise required scarce access. Today, medical journals are online. Engineering tutorials are on YouTube. AI models can summarize complex research. People can independently access raw information. This produces a psychological shift. If I can read the same data, why should I defer automatically? Authority moves from hierarchical to contested. Experts are no longer the only narrators. Once access to information decentralizes, interpretation decentralizes too. This creates an environment where alternative explanations proliferate naturally, not because institutions disappeared, but because they lost exclusive control over narrative production. Factor number 8. LLMs and collapse of information asymmetry. This is new. Large language models introduced a practical shift. Clients can now cross-check expert advice instantly, generate alternative strategies, translate complex jargon into plain language, simulate second opinions at near zero cost. This creates a powerful feedback loop. A client receives expert advice. They verify it using AI. They detect inconsistencies, gaps, or overcomplication. Even occasional mismatches are enough to trigger doubt. Experts historically benefited from information asymmetry. That asymmetry is collapsing. Clients now realize they can draft legal documents, plan financial strategies, understand medical concepts, diagnose technical problems at a fraction of the cost. In many cases, the output is good enough. Not perfect, but sufficient. The critical change is not that AI is always superior. It's that the monopoly on structured knowledge is gone. Once clients experience solving a problem themselves, or validating an expert's work, they recalibrate the value of expertise. Saving thousands, sometimes tens of thousands in currencies, changes behavior permanently. This is likely only the beginning, because once people experience independent verification at scale, trust becomes more evidence-based rather than authority-based. And that cultural transition naturally weakens centralized epistemic control. Factor number 9. Visibility of elite capture. Large institutions appear more and more interconnected. Regulators moving into industry jobs. Politicians joining corporate boards. Think tanks funded by private interests. When regulatory bodies and industry share personal pipelines, trust in neutrality declines. This doesn't require conspiracy. It only requires structural overlap. And structural overlap generates perceived capture. Once institutional overlap becomes visible, people stop viewing institutions as independent actors. They start viewing them as coordinated networks. This interpretation strongly accelerates the spread of systemic and conspiratorial thinking. Factor number 10. Social media amplification. Previously, distrust spread slowly. Now, a single scandal circulates globally in minutes. A malpractice case in one hospital becomes symbolic of the entire profession. A falsified study becomes proof that science allegedly lies. Scale distortion amplifies anecdote into narrative. And narratives reshape public psychology. Social media does not merely spread information. It industrializes distrust. Because emotionally charged examples travel faster than institutional nuance. And when distrust becomes algorithmically amplified, fringe narratives gain unprecedented distribution power. Factor number 11. Cultural shift toward individual sovereignty. There is also a philosophical layer. Modern individuals are less willing to surrender autonomy. Trust in an expert implies partial surrender of control. In an era obsessed with personal agency, optimization, and biohacking, deference feels outdated. People prefer consultation, not authority. Experts who still communicate hierarchically feel authoritarian. When autonomy becomes culturally sacred, people prefer building their own models of reality. Even imperfect self-directed understanding can feel psychologically preferable to passive dependence on institutions. Conclusion. Trust didn't collapse randomly. It eroded under multiple pressures. Visible incentives, credential inflation, perceived meritocracy failure, institutional constraints, AI-driven verification. Experts still exist, but they are no longer insulated from scrutiny. This may explain one of the defining cultural shifts of the last decade. The rise of fringe theories may not primarily reflect growing irrationality. It may reflect the progressive collapse of unquestioned institutional trust. Because when official systems stop appearing fully coherent, fully neutral, or fully truthful, people begin constructing alternative explanatory frameworks. Some will be false, some will become entirely detached from reality, some will be insightful, some will prove correct. But structurally, their rise becomes predictable, because once authority loses automatic legitimacy, competing narratives inevitably emerge. When authority can be questioned, verified, and partially replaced, trust stops being automatic. it becomes conditional.